Ladies and gentlemen, hi everybody, I'm Dan with JobTread. I'm standing here with Aaron McGinnis. He's going to be talking to you today about Dungeons & Dragons. I'm just kidding. He's got a whole presentation for you today. Very excited to talk to you. Without further ado, you've got Aaron.
Thank you very much.
And please wait till the very end. You're going to have time to ask questions. Leave those to the end. Here you go.
And I'm going to totally contradict what you just said. If you have questions, raise your hand. Hilario is around here. He will get to you with a microphone and fire them off at me so we can be as maximally distracting as possible. And we're going to go ahead and do this thing. So let me get a quick show of hands. How many people here are general contractors? Okay, cool. How many people here are specialty? Okay. How many people here are not going to raise their hand no matter what I ask? Okay, good. About a third of the room. Awesome. I like the rebellious nature of this industry. So that's me. That's my mug. Who am I and why should you listen to me? I'm Aaron McGinnis. I am the owner and founder of Contractors Team. We are a bookkeeping firm. I've been in construction for about 17 years before we switched over and started doing bookkeeping at large. We service only construction companies. This is not a pitch. This is establishing my CV. The reason you should listen to me is because I have gone through every iteration of poor bookkeeping that could possibly be imagined in construction. I've found 100,000 ways that do not work and lots of ways that will cost you a lot of money. And what I'm here to do is talk to you about some of the basic fundamentals of bookkeeping, cost codes, and job costing, because all of those things are the basic building blocks that create a useful profit and loss statement at the end of the month and create a visibility into whether or not you have a profitable business. And you don't necessarily have to raise your hand, but how many people here are in a situation where you try to determine whether or not you're profitable by logging into your bank account and seeing if the number went up or if the number went down this week? Yeah, you don't have to answer that. For a long time, I was in that boat. Fortunately, that was many, many years ago. But I see that all the time in this industry where there's a lack of understanding for what constitutes good bookkeeping and even more basically good practices throughout the month and throughout the job that created the ability to receive or look at a meaningful profit and loss statement and say, am I making money? Am I not making money? And a lot of people do it just by logging into the bank account and saying, yep, number went up or number went down, and I don't know why, but maybe I can afford a new truck. So the first thing that I want to talk to you about is just methods of accounting. And then we're going to talk about cost codes, and then we're going to get into job budgeting and estimating and how that kind of all ties together. I'm going to say some things that maybe you'll like. I'm going to say some things that will probably tick some people off. That's okay too. There will be subjective opinions involved. Who here maybe feels like they have a pretty functional understanding of cash accrual and percentage of completion? Okay. I love the honesty in this room. Cool. So if you understand these things, cool, this will be a fun refresher for you. If you're brave enough and honest enough to say, you know what, I maybe don't understand, then this is for you. And it's important to understand these things because, again, this is the basic underlying structure of what we do every month. So there's three fundamental methods of accounting, and two of them build upon each other. The first method of accounting is cash, and most fresh businesses, and indeed even businesses that have been around for a long time, they basically use a cash method. And what does that mean? Cash method of accounting means I get $100 today, I record it as revenue, it's income. And maybe next month, I spend $100, okay? Or I get $100 today, that's revenue. I put in a order to my lumber yard for $50, but I don't pay it until next month. So that doesn't become an expense until next month. I don't worry about it until then. Accrual accounting says I create an invoice for $100 today. That's revenue. When I receive it, doesn't really matter so much. It also says when I create an expense or I order $50 worth of lumber to my lumber yard today, that becomes an expense today. Not when I pay it next month, but today when I've incurred that expense. So why does that matter? It's important because it gives you a different level of visibility into where your money's coming from and where it's going to. And raise your hand if that made any sense at all. Okay, cool. And the people who are not going to raise their hand are clocked out. They're figuring out what they're doing next. That's okay, I see you. It's cool. All right, so we can build upon the accrual method of accounting with something called percentage of completion. Percentage of completion methodology is based on accrual, but you're matching income based on expenses. And I'll say that again, you're matching income based on expenses, and we're going to talk through what that means. And here's a slide showing exactly what I just said, cash versus accrual, if anybody wants to take a picture of that. Yes, no, maybe, okay, you've had a minute. Percentage of completion. So just like in accrual, your expenses are considered when they're incurred. So if I put in an invoice or a bill to my lumber yard that says, hey, I want $50 worth of lumber, they send it out, I've incurred it, but I don't pay until next month, okay? Revenue is also considered when it's occurred. So again, I put out an invoice to a customer, that's immediate revenue for me. So what is the difference between accrual and percentage of completion? In percentage of completion, we're looking at a job budget that says, okay, we're going to have so many expenses and we're going to have so many dollars of revenue. And I have a slide for this. Simple math. So if we've quoted a job out to a customer at $120, and we have a budget that says we're going to have $100 worth of expenses, every dollar of expense that we have generates 20 cents worth of earned revenue. So why does this matter? This matters because we might have deposits that we receive that we might consider as total revenue if we're just looking at accrual method accounting. Is it actually revenue if we haven't earned that money? It's not. So we can get a big old deposit. Let's say for easy math, we get $50 in deposits this month, and we perform $40 worth of work on our imaginary job that is only $100, which hopefully no one in here is doing that. So if we've done $40 worth of work and we've made 20 cents per dollar of profit, then our profit for that month is $8. So what happens to the extra $2? We're going to explore that topic because we haven't really earned it, right? It's sitting in the bank account. We've gotten it from the customer, but is it earned revenue? It's not. So what you have to do is you have to adjust your profit and loss statement to remove that extra $2 in revenue because you haven't earned it yet. So then we're going to jump over and we're going to make these topics even murkier. Sorry. What's the difference between an overall job, which is where we look at, okay, we've got $100 worth of expenses, we've got $120 sale price to our customers, we've got $20 worth of revenue, and we're making 20 cents per dollar. Well, what if we break that into cost codes? And we start looking at jobs not as a big overall number, but we start looking at it into little discrete parts. And that's what we do with cost codes. So instead of looking at profitability, we do look at it at an overall level, but we also look at it within cost codes. So let's say that you have framing lumber, and you're looking at that little bucket of profitability and expense. What's the benefit to that? So as I get through discrete parts of this job, I can close out those portions of my profitability. And it lets me see much faster if I'm over budget, on budget, or what's going on with that portion of the job. Why that's important, we'll get to. So as you break it out, it makes it more visible. And that's the thing that I want everybody to bear in mind. We break things out, they become visible. Instead of just lumping dollars together into expenses and profits at an overall level, which if you're doing longer term jobs, you may not be seeing that totality until the very end, which might mean it could be a year, right? Who does jobs that last longer than 3 months? Yeah. And how long do you spend waiting to know if the total job is profitable if you're doing a longer term job, if you're doing a 3-month job or a 6-month job or a 9-month job? And how long do you wait to know if your framing package came in on budget, over budget? What was your grippage? What was my slippage? How do I visualize that? And that's where cost codes come in. So it's the realization of budget versus actual, profit and loss at a detailed level. And I think I see you in the audience here. So yesterday, somebody came by my booth and we were talking cost codes and gave me this great analogy that I felt really dumb for not ever having thought of before. I'm pretty certain that everyone in this room has been into a Lowe's or a Home Depot, okay? And you've got aisles for everything. There's the paint aisle, there's the hardware aisle, there's the lumber aisle. And a good way to think about cost codes is financially, it's aisles. And you can get as detailed within that aisle as you like. Maybe I've got a lumber aisle for all of my costs for lumber, and I can break it down into racks, and then I can break it down into bins. And how detailed you get with that really depends on how you think and to what level you want to do your reporting. And that's something we'll get into in a bit. So to sit back again and look at what is the advantage of doing it this way. How often, and again, you don't have to call yourself out for this, unless you want to. How often do you get an invoice for a job and you say, did I budget for that? Is that on budget? Is that over budget? Well, I don't know. Throw it into the cost of goods sold, and we'll let God work it out. We'll figure out, maybe in 9 months when the job closes, if we are actually profitable or not. And it's easy to have happen, right? You say, well, it's a big job, and I don't know, maybe there's some variance here, but just code it. We'll work it out later. I'll see if I'm profitable or not. And then you get 9 months down the road and you see, didn't work out the way I thought it would. So what we can do here is we can use this methodology to look closer and see what happens when prices increase. Who was around during COVID? Okay, who got completely gobsmacked during COVID by a lumber bill that was not what they expected it to be? Yeah, right. When lumber increased 400% in like 60 days, I knew people who thought they were going to get a $100,000 bill from their lumber yard, And instead, they got a $400,000 bill from their lumber yard, and they left the country, moved to Argentina, and were never seen or heard from again. They had to get plastic surgery to escape. One of the benefits of doing this is when I'm looking at my expenses in these discrete categories and I'm budgeting correctly and I'm doing my receipt categorizations correctly, when I'm getting those bills, those invoices, and I'm looking at them and I can see, okay, my budget was for this much, and I think I'm at the end of my framing period, and I can look in that cost code or cost category and I say, I'm this much times 4. Something has gone terribly wrong here. And those dollars don't just all become one big lump of receipts in my financial system that I'm not really sure what's going on, and maybe when I get to the end of the job and I find out 9 months from now that I've actually lost money, then I'll go back and I'll retroactively try to pull this apart. So don't do it that way. Get it detailed and break it out. There you go. So that comes back to cost codes. What are they, and how do we work with them? And again, I like the lumber yard analogy, by aisle, by bin, by grouping. Some examples that I like to use, and I'll give you some more detailed examples. But broad level, we might talk about framing lumber. We might talk about HVAC. You might talk about trusses, plumbing, and electrical. And what I try to tell people is don't get too in the weeds. It's easy as builders to say, I'm going to go from no weeds to all the weeds. And we try to dive in, and we create so many cost codes that no one can keep up. And bear in mind that as you're using your cost codes, you've got to code things as the expenses come in, as those invoices roll in. So you can't have too many, or else it's too burdensome to work with, but you can't have too few, because then you don't get decent resolution. So one of the biggest advantages is that they're going to provide a structure to your estimates and your job costing process. And I will get into talking about these as templates. But it's important to use a job cost structure or a cost code structure to really define how do we want these jobs to run, how do we want to think about our expenses, and to some extent, how do our budgets move through time and space? How can I set this up in a way that I can chronologically open and close my expenses by the cost code, so I can see if those portions of the job are successful, if I've got grippage, if I've got slippage, or if I'm right on budget. A cost code chart will be specific to your business. There's some universalities, but some of this comes down to how do I think as an owner? How do my PMs think? How do I want to visualize my expenses and my profitability as it happens? And we'll get into talking about a chart of accounts as well, but it's one of those things where, again, you don't want to be too detailed, you don't want to be too simplified. So this is an example of how cost codes might look, and if anybody wants this example, it's free. We have a free list of cost codes that you can get from our website. Again, not a pitch, it's just a free resource that you can access. So what I like to do is set up my cost codes, moving again from one segment of the job to the next, to the next, to the next. So I like to use numbering systems. So everything gets a upper level number, and then you divide out into the specific categories. So what you can see here is this is just the first 3 sections of a standard cost code list that we use. You've got a 1,000 section, which is just preparation and preliminaries, and it breaks out into some of the high-level categories of things that you will probably use on almost every job, and it makes it easy to go through and see what am I using. $2,000 might be excavation and foundation work. $3,000 might be rough structure. And then you move on to MEP, exterior finishes, interior finishes, etc. So when you're creating your cost codes, again, I like to align these to the way that money is going to move. And what you want to avoid doing is creating a situation where you've got to take an inbound invoice and break it out into 100 different cost codes. So because that creates a lot of human error or opportunity for human error. And what we want to bear in mind is when we're working with job costing and anything that is human error dependent, which at the end of the day, data entry is, even basic math can create the opportunity for problems, mistakes, even just casual mistakes, like I transposed 2 digits and now I've created havoc because I don't know what's going on anymore. So what I like to do is make my cost codes into these buckets where I can take my vendor expenses or my trade partner bills and I can code them, and I don't have to break it out into 10 different line items, and I don't have to think too hard about where those cost codes go. So simplification and no math. Don't create a situation where you've got to break out math. And an example that is pertinent, I think, is let's say you've got a lumber bill and you've got 2x4x8 studs, 2x4x10 studs, subfloor, nails. You don't necessarily want to have a cost code for every single one of those pieces parts. You want to have a single cost code that is framing labor or framing lumber. Because if I have a different cost code for every single one, then I've got to take that invoice and break it out by line item, and then I've got to take my taxes and I've got to recalculate it and figure out which line item gets what, and it becomes very messy very quickly. And when you're using in-house labor, and this is something that I go through a lot with our clients, if I've got in-house labor and I want my labor to be tied to a cost code, every time, especially in JobTread or any system where we're clocking in and we're logging in by the cost code, anytime my labor force clocks in, they've got to okay, which cost code am I logging into? And if you've got 100 of them, most likely the guy in the field is not going to pick the right one. So you've got to keep it condensed enough for them to be able to interact with this system at a human level. And we all know what it's like to be on a job site, right? It's cold, it's hot, it's raining, it's impossible, and I'm trying to do my job, and the boss wants me to, okay, I'm decking my subfloor now, and then I've got to clock out, and maybe, okay, now I'm setting trusses, clock out, clock in. Some people can overcome that with their labor force, but a lot of people can't. And so you want to keep the cost codes condensed. But you also don't want to have too few, right? So the opposite example of having too few cost codes might be MEP, right? Mechanical, electrical, and plumbing. Don't have just one for all three. You need to have different. Here's plumbing, here's electrical, here's HVAC, break that out. Because if you have just one, then you're probably not going to have very good resolution. Another example that I like to use is if you've got in sort of preliminary work that's going on, like if you've got an architect that you're working with, or you've got an engineer, or you've got a civil engineer separately, it might be a good idea to separate out civil, structural, architectural, because if you have them all clumped together and you're getting invoices from 3 separate entities at different times, it can make it hard to visualize where is my money going and how do these job costs work out. So that brings me to iterative improvement. And what is it that we do with cost codes that will let me be a better estimator? So raise your hand if every time you sit down to write a new estimate, you stare down a blank page. Love the honesty. And when you sit down to write that estimate, you expect for every aspect of that job to come nirvana-like from your mind well. It would be like sitting down to bake a cake or a very complicated baking project with no instruction book, right? No recipe. You're just going to remember that I need so much baking soda and so much flour and set my oven to 375 and so on and so forth. But we're doing that for very, very expensive products that are going to be assembled by a legion of people that come after us. And we're going to ignore the fact that hopefully we've been in this industry. If you've done it once, you have something to iteratively improve upon. And what cost codes do is they give you the ability to make that iterative improvement. And what do I mean by iterative improvement? I mean, I take the thing that I did before and I say, what went right, what went wrong, what can I do better? And then I improve upon that stack. So instead of starting with a blank page every single time and I go, well, framing, I need some framing and I need demolition. No. So use your cost codes as a starter template for all of your future work. And if you come across something and you say, well, I don't have a cost code for this. I need to add it. Well, now you can add it and use it in the future. And once you start going through that process, it's kind of witchy what will come out, and you kind of see the things that you forgot. Early on, when we started working with cost codes, and I will call myself out, as I told you, I made 100,000 mistakes. Early on, when we started working with cost codes, we wrote out the list, and we were like, oh yeah, this is good, and we adapted some other lists, and oh yeah, we felt good about this, and we got through the first job, and we were like, wow, we suck. We missed a lot of stuff, and how could we possibly have been doing this without a template? And the one that I like to use a lot is print fees. If you are working on a larger long-term job, most likely you're going to have to print your plans, right? And raise your hand if you account for print fees. Yeah. And on a long-term job, those print fees can add up, can't they? You got blueprints, and I don't know about your jurisdictions, but the ones that we worked in, 17 years ago, you could get away with minimal plans, and now it's like I got a plan roll I can beat a man to death with. And those print fees add up. And it's little things like that where you say, okay, I didn't really think about that, but oh, now I do, and now I have a cost code for it, and the cost code is staring me in the face as I'm assembling my list. So it makes up for some of that blank page-itis. Which is going to lead me straight into project estimation. And this is my warning. Opinions and subjective truths ahead. And probably I'll upset some people, and I don't know, maybe not. Maybe we'll have a good conversation. So far, no questions. I was hoping for questions. I'm not mad, I'm just upset. No, wait. I'm not mad, I'm just disappointed. So, estimation. How many people came here just to hear me opine about estimation? A few. Okay, good. So if you came here to hear me opine just about estimation and you're feeling brave, question? I see Hilario, yes, we can extend this thing.
You're saying make a cost code for more things as opposed to just making a list of things within that cost code. What can you talk about with that?
One more time.
So rather than make a cost code for print fees and all the items involved with, let's say, admin stuff, why not just have a general admin single cost code? So if you come up with more things, what's your take on making it more cost codes versus just having this is all the things within this cost code?
Yep. So that's actually a really good question. And what I like to say is within a cost code, yes, I can have multiple cost items. I can have as many as I want. What a cost code does is it's good at drawing out something that may not otherwise be obvious. And I like print fees as an example because it's easy for them to get lost. And it's not a big job expense, right? If you're doing $1 million job, Print fees might add up to a couple $1,000s at the end. Maybe you're probably talking less than $5,000. So why am I an advocate of having something as silly and small as print fees be its own little shrine of a cost code? And the reason is it's really easy to overlook that because it's non-similar to most everything else that goes into the job costing, right? We only are going to deal with print fees in a limited capacity. And so it's easy, I think, in the human mind for something to be out of sight, out of mind. I don't think about it necessarily when I'm trying to think about everything else that might go into a very large job that's going to go on for more than a year. And so if it's not like there in front of me, then I might forget to do it. And that's what I'm looking for out of my cost codes, is to bring out those things that are easy to overlook and I might otherwise miss. Does that make sense to you? A little bit? Yeah? Good. Cool. So estimation. Unpopular opinion. I think most contractors fail because they fail to estimate properly, and they underestimate the complexity of estimation. So you go into a job, and I don't even want to call it necessarily hubris, but you say, I've been doing this for a long time. I can sit down and it can spring, nirvana-like from my mind, and no problem. And it just doesn't work out that way. Most contractors fail, and mostly they fail because they didn't have all of their costs taken into account for. I think renovation can be considerably more difficult to estimate than new construction, and perhaps I'm preaching to the choir there, and I don't know, maybe not. When you're dealing with new construction, I think there's a lot fewer variables than when you're dealing with renovation, and I think that it's very easy for renovators to fall behind when it comes to out-of-scope additions to a project. And this is just, if you go to any sort of coaching seminar or listen to any coach, they're going to beat the same drum about change orders and how important it is, especially in a renovation project, to handle those change orders. But as a renovator, I think, and a lot of people get into construction because they actually want to help people. And you get into a situation with a renovation where you see something you didn't expect, you didn't scope for it, and you try and help the homeowner out, or you try to soften that blow, and you end up losing money on it because you don't want to necessarily say, well, I'm sorry, it's another $70,000 to rebuild the foundation and reframe half the house because of the termites. And it happens. I've seen it happen over and over. I think doing multi-room renovation is considerably harder than estimating a whole house renovation. So if you're going, kitchen and bathroom, that's a lot harder than we're going to strip the entire house out and redo everything, because you're trying to deal with more cruft in the systems. And again, we come back to cost codes where you can significantly improve your likelihood of success in estimating, because I can take the templates that I've set up for renovation or for new construction or for one-room renovations or multi-room renovations or whole house renovations, and I can take what I've learned in prior jobs and use them in future jobs to make me better at what I do and give a better service to the customer. There you go. So when we talk about those templates, yes, it comes down to, how do I want to template things out? And can I have a template for every different type of job that we do? Can I take that same list of cost codes and say, well, I'm probably going to use these, and these on an interior-only renovation. I'm going to use these for new construction. I'm going to use these for additions, and then start building out your costing templates. And as a tie-in, if you're not using schedule templates, you really should be thinking about using schedule templates as well, because those are hugely important. I'll tell another story that makes me look really dumb. When we started doing schedule templates, when we did our schedules the same way we did our estimates, we would start with a blank page, and then we'd say, well, okay, we're going to start with demolition, and then we're going to do this, and then we're going to do some framing, and then we're going to do our MEP, and then insulation, and then drywall. And you feel like, I'm a smart guy, I know what I'm doing, I should be able to write that from scratch. But then when we started doing templates for all of our scheduling, we kind of realized that, well, it's easy to miss little things like ordering a porta potty. And be honest, how many of you have started a job and you have a crew out there on day one and they call you up and they're like, hey boss, where's the porta potty? Oops. Did anybody have a to-do to order the porta potty? And again, these are not stories that make me look smart. I'm not necessarily here to do that, but they're to illustrate that point. That when you template something out, you can iteratively improve on it, and you can stop making mistakes, you can stop missing things. Okay, more opinion than subjective truths. Methodology for subcontractors, and hopefully I'll get somebody thinking about something here. So, how many of you will estimate for your subcontractors, for your trades? Okay. If you are estimating for your subcontractors and your trades, how able are you to force them to adhere to the numbers that you estimated for them? No hands. Oh, if you are estimating for your trades, are you able to force them to adhere to the numbers which you budgeted for them? Okay, we've got a few. I see you in the back. Okay, yeah, a few. So here's the question that I always want to throw out there. Why are you assuming the liability for a budget that you cannot enforce? Oh, good, we have an answer. Hilario, quickly, the mic. Yep.
A lot of what time was what we ran into is time. We need to get an estimate out to the client as quickly as possible so that we don't lose the job, which means that we can't always wait for our sub to come out, review, then themselves build us an estimate that we can tie into our estimate. So it ends up being something that we do to get the estimate out as quickly as possible.
So you're in a competitive bid situation, you need to get the bid out. Yeah, of course. So let me ask you this, and this goes a little bit into the sales side of things. How do you escape from that competitive bid scenario? How can you get a number out that can be compelling to the homeowner that you're not ultimately locked into? Or once you've sold that job, then do you have a scope review period where you can come back through and your numbers are subject to change?
We explain that to the client that, this estimate it's
iffy.
It could go up or it could go down based on what ends up happening.
Yeah, it is, and so I think that's tapping into a best practice there for estimating. If you are forced into a situation where you can't take control or take total liability for the numbers that you're generating, you either have to have a second stage of estimating where you're saying, okay, we're going to give you a number, but that number is going to be subject to change after a final contract review or after a final scope review, after we walk through with our trade partner. And that's a hugely important step. And so you have to make sure, sort of psychologically or in a business sense, that you're not so desperate to start that job that you sell it on the iffy number today, and then tomorrow you're like, okay, let's start the job. Because that's where dragons lie, right? Another thing that I see contractors do, yeah.
The way we handle that is through an allowance. So for things like painting cabinets that we can't get pricing on, We put an allowance in, and it's usually best guess, and it's pretty close usually, but that gives us the option to change that number.
Absolutely.
And it gives the client, we sell it by, it gives the client some options to pick less expensive items if they want to, or if they decide they want to go for the luxury stuff, they can do that. It just costs more.
Absolutely. And that's another good practice, having that option available to you. And that's especially important when interior design isn't done. When, as you say, you mentioned cabinetry and paint, right? Or maybe trim or maybe tile. You don't have that exact specification. And
Flooring is a big one too.
flooring, yeah. Any sort of fit and finish where you don't have that exact specification, you don't have the SKU level specificity. You can either say, you know what, we're going to give you a construction estimate, and we're not going to include the fit and finish things, the faucets, the sinks, the tubs, etc., or you can do an allowance, and you have to be really clear about this is subject to change based on your final. Where I think we run into even more problems is when we're trying to do things like electrical estimation. Very few of us are licensed electricians or electrical masters, and a lot of times what I see is you get the electrician in there or the plumber in there, and they see something you missed, and now you got to go back and correct yourself. So this comes out to what we were just talking about, having really some best practices for dealing with your trade partners and their budgets. So if you can't tie a budget to a scope, what are you going to budget? You can't, right? You have to have the exact scope, or you have to give a very generic number. And this is 1, 2, 3 stuff for if you've been in the business long enough, or maybe not. You want to involve your trade partners. I'm a huge believer of involving the trade partners in the estimation process. And the question that I get a lot from that is, well, if I'm doing a lot of bidding, how do I involve my trade partners without burning them out? And what I suggest doing, and again, this kind of goes into sales and how you structure your selling process, but I'm a believer in having a preliminary number, maybe based on square footage, or a retainer number that says, okay, we're going to give you a retainer contract, and you're going to let us then come in and do some detailed scoping, some detailed budgeting, because there's a value associated with that. And before you have that final sign-off, have your trade partners come out, your vendors come out, and do your exact budgeting. And this is some more that will probably, I don't know, maybe I hope this will get people thinking. So when you're doing your material takeoffs, how often do you provide materials to a trade partner where they're going to be using it up, but they have no liability for the use of the materials? And I see that a lot on roofing, and I see it a lot on drywall, especially. It's hard to control with framing, but a lot of times what I see is GCs especially will say, okay, well, if I buy the drywall from the drywall, my drywall supplier, then maybe I'll cut a few percentage points off of that, and I'll recoup it, or I'm going to buy my shingles directly from the supply house, and they're going to send it out. But then you get your crew out there, and they're installing, and they have no liability for the materials. They didn't buy it. They're not paying for it. It's not their liability. And what I always saw, especially drywallers, is if I bought the materials based on their takeoff, or they just told me what it was, somehow there would always be lots of waste. And if they bought the materials, somehow there was like zero waste. It was funny how that worked. And some of that is crews, and I understand people are going to say, well, my crew is really good. I don't need to worry about that. But think about the liability for the materials as you're doing your takeoffs and as you're thinking about who's going to do the assembly. Do I want to trust my installer to be as efficient as possible with the materials that I send to them when it's not their liability and they maybe don't care? The other thing that is very important, I think, especially in the post-COVID world, and we touched on this, how many people have an escalation clause in their contract for materials? Yeah. How many of you had to exercise that escalation clause in the past 5 years? Yeah. So, especially now, I think it's very, very important to have that escalation clause, and I like to say make it an unlimited escalation clause. I've had people ask me, well, do you cap it? Do you recommend capping it at 10% if there's a 20% increase? And, well, no, not unless the lumber yard is going to cap the escalation at 10 or 20%, which they're not going to do. So if you're providing materials on a long-term bid, think about having an escalation clause that says, okay, if our basis increases by more, if our base of cost increases by more than 5 points, maybe, or 3 points, then we're going to turn around and back bill you for the increase in cost. And for any project that isn't new construction, especially multi-room or additions, I actually think it's a good idea to include your lumber layouts in your contract and your final scope, because it can be really clear when you say, well, we're doing work on this wall, but not that wall. And why would that matter? Well, maybe we opened up that wall and we found more termite damage, and the customer says, well, your contract says repair termite damage. Well, we meant that wall, not that wall. And if you have a lumber layout or a detailed layout that you've kicked out from whatever system you're using, then you can avoid those kind of arguments. And it comes down to a question of contract scope. And we have to be a little bit like lawyers, which I hate, but it's the industry we're in. There is a massive difference between a scope of work that says replace all rotted subfloor and replace rotted subfloor where indicated in Exhibit A. Because if I say replace all rotted subfloor, then I can be on the hook for an unlimited amount of subfloor. If I say replace all subfloor where indicated in Exhibit A, well, now I'm only responsible for that which I have properly scoped and is included in my estimate. Okay, part 3. How does all this end up in a P&L? We've sort of taken a detouring path here. Go back. And how does this actually help you run a business? So we talked about cost codes being a rigid framework for handling financial records and visualizing estimates versus actual expenses. And we've talked about expected profitability within cost codes, facilitating identification of on-performance budget. So am I gripping, am I slipping within my cost codes? How does this flow? The first thing, and I say this about 100 times when we're onboarding new customers and we're looking at things like a WIP report, profitability reports within a budget framework are only ever as accurate as the underlying data. And I'll say it again, it's only ever as accurate as the underlying data. So if your budget's inaccurate, you'll never know if you're really making money or not. So it's very careful. You have to do those careful budgeting exercises. And if you've got miscoded expenses or poorly organized budgets, that's going to lead to data hygiene errors, which is going to lead to profitability mismanagement. And so that actually ties back into, we were talking about simplicity versus detail. If I have too much detail and I'm putting things in the wrong bucket because I've got 18 different buckets of 18 different cost codes for lumber, then it can be difficult. Oh, we're at 10 minutes. Golly jeepers. Need to talk faster. But if you've set up your cost codes correctly, you shouldn't have too many miscodings. Okay. So how does all of this play together? Right? Thank you. So what I say is use JobTread and QuickBooks and lean into their strengths. JobTread is tremendous at visualizing job profitability and expenses. QuickBooks sucks for it. and I'll say it again, QuickBooks is terrible at it. So if you're trying to use QuickBooks to visualize, especially QuickBooks Online, to visualize your job profitability, you're probably just looking at a confusing, burning dumpster fire of a mess. So the way that I recommend this be set up is that you've got all of your job costs in JobTread and push everything into maybe 1 or 2 cost of goods sold accounts in QuickBooks. And yes, I said it, fight me. People argue with me all the time that we want to have 18 different definitions of cost codes within our QuickBooks, and I think all that does is make your P&L look like a spaghetti monster. Look at your job expenses within JobTread. So at the end of every month, you're going to have a work in progress report, or hopefully you're going to have a work in progress report. And what that does is roll up the profitability for each and every job. And again, if we go back to our percentage of completion methodology, what that's going to be telling me basically is, okay, on the Jones job, if we go back to our example, we took in $50 in receivables. We spent $40 on job costs. We have 20 cents per dollar spent. We made $8 in revenue. We have $2 that we need to back out. And that's what the work in progress schedule will tell you. You should be delineating that out so that you can visualize how much your actual earned revenue is, so you can know the difference between earned revenue, which is based on what you spent, okay, versus gross receipts, which is just based on the number of dollars that the Jones gave me. This is a dense one. I am sorry. If I had a little more time, would have written you a shorter letter. But this is the distillation, and again, this is not a sale, this is just how we do things. This is the distillation of what that work in progress report looks like. There is some finagling that has to be done to get this information out of JobTread and into QuickBooks. It is not an automatic process. Maybe it will be at some point in the future. But what we want to be knowing out of this is what's in that orange column there. What is our earned revenue? What was the cost of construction? What's the gross profit? And how much revenue do we have? How many dollars do we have left to go on that job? And this is what that wrap-up should look like. We want to know what our earned revenue was, what our cost of revenue was, and what our gross profit was for all of the jobs for every month. And this is a report that you should be generating monthly. And then at a glance, I can usually log in and look at a P&L statement and know whether or not a bookkeeper is on point, because we're looking for that over-under billing adjustment. And the over-under billing adjustment adjusts the receipts, the gross receipts, to my actual earned revenue so that I can know what my actual profitability was for the month. And that's just that. This is a very, very simplified top block. This is that first block that shows you where the gross profit is. Everything that is under this is what we would call under the line expenses, which would be all of your overhead. And what we are here to say is, if you remember zero from this presentation, if you walk out of here and it all just blows away into the wind, the one line that I want you to remember is that gross receipts are not profit. Gross receipts are not profit. Not every dollar that I got handed this month is profitability. It's maybe just deposits. Gross receipts are not profit. And that's it. Thank you for tolerating my incredibly eloquent public speaking.